But just for those that are here this morning, I just want to say a very, very warm welcome. And you would have noted that obviously we have changed over from Zoom to MS Teams for our webinars. And this is to allow for inclusivity for all of our members, where we know a number of companies would prefer not to be utilizing Zoom or having their staff accessing via Zoom. So we ask, there's a small disclaimer for today. We hope that the experience has been good for you so far with the registration and login, and that the day goes well as we work around this new platform for webinars for the FIA. Today's webinar is a little bit different. We've got an expert team here to run us through some PR claim simulations, and this won't be a one-off. We have got another one already in the very busy calendar for this year, and depending on how things go and what happens in the marketplace, and if there's a very interesting claim that comes up, we may add some more into the diary. We really do think this will give you a great perspective as to what could possibly happen in your business, what you should be preparing for, and why you should be making sure that your covers are appropriate for your business. And I'm not going to touch on Steve's, where Steve will probably hammer home that point. But we are going to kick off just so that we can stick as close to the time schedule as possible as people still come in. And I'm going to put a warm welcome to Terry Solomon, who most of you will know. She heads up the team at Marsh that looks after the FIA PI scheme, and Stephen Morris is joining us from Leopard, and who needs no introduction whatsoever. I've got Brad Frank from our legal and regulatory team who's here today assisting and keeping an eye on us. Judith Punchani, who has joined the team at the beginning of March. She's a membership specialist at the FIA. And then the ever familiar face and guiding light of Barry Taylor. And I just want to wish him a superb birthday for earlier on this week. Barry reached a milestone this week. I won't share his age. He can do that in the chat if he wants to. But happy birthday for this week. We appreciate you. Terry, so I'm going to hand over to you. We're going to switch off our mics on our side for now, and the floor is all yours.
Thank you, Sandra. Good morning. Can you hear me? Let's check that first. Perfect. Good. And Sandra, you're going to start sharing the screen. But while you're doing that, just a very warm welcome to everybody who is joining us today. Really good to chat to the members. Obviously, a huge warm welcome to Steve, Chairman of Leopard. As Sandra said, Steve needs no introduction, but I just want to, say thanks, Steve, as always, for coming through and supporting not only Marsh, but the FIA and all the members, with all your wisdom. And yeah, do you want to say hi?
Thank you, Terry, and good morning, everybody. I enter this with great trepidation because I'm likely to be the only insurer of record in this session, and I probably insure most of you, so I'm going to be accused of self-serving commentary. Just one thing, I only have observations. I do not give advice. Only brokers do that. You're qualified, I'm not.
Thank you, Steve. Good. It's not every day that as a broker I get to interrogate my markets in front of a couple of hundred people about a claim, so I'm looking forward to it. Good. So I think just we've got a lot to get through, so I'm going to get straight into it. Sandra, if you just go to the next slide and maybe just to touch on the agenda. I think the idea for this really came about, we had our marketing meeting, I think a couple of months ago, and we said what would be of value add to the members? What are sort of the things that the FIA is being asked about the most? And the issue of claims came up, and particularly, of course, professional indemnity claims. So what we thought we'd do today is we'll take you through an actual claim. This is an actual claim that happened. Obviously, we've changed a couple of things to protect confidentiality and also to embellish it a little bit. But as I said, this is an actual claim. So we'll go through what the facts were and what went wrong. I'll then touch on the notification requirements, and that's a really, really important part of the claim. So in this particular instance, once the broker realized that the error had happened, he kind of went into panic mode. We got a frantic call, didn't know what to do, who to call, when to call, how to call. So I'm going to just take you through what are the notification requirements in your policy. And then, very importantly, when you notify a claim, what should you notify to the insurer? So that's really important. And once we've done that, we're then going to look at how do the insurers deal with the claim. And here we'll do something a little bit different. Instead of boring you with a whole lot of PowerPoint slides, Steve and I are really going to have a discussion around how he dealt with this claim from his perspective. So
try to have a conversation.
Yeah, promise not to interrogate. But you know, from Leopard's perspective as an insurer, what do they look for when dealing with a claim? When do you appoint legal counsel? When do you appoint loss adjusters? When do you subrogate, as an example? Now, in this one, you'll see that there were some issues around the minimum risk management requirements in the policy. There was very little policy documentation, or not policy documentation, there was very little correspondence with the client. Everything was done sort of on the phone because it was a very cozy relationship with the broker. And so at some point, you know, Leopard didn't want to pay this claim. You know, they just said the minimum risk management requirements weren't there. The T's and C's insofar as policy wording were not met. And at one point, they really didn't want to pay the claim. And so sort of what changed their mind? And also, how did they negotiate with the insurer in this particular instance, as you'll see. And then we're going to end off with, well, what happens when a claim is paid? Just a couple of points about the agreement of loss, what you should expect or look for in the AOL. And of course, if the claim is rejected, then what are your rights under the policy? And end off with some lessons learned around this one. So good.
Yeah.
All right. So if we get straight into it, this, as I say, is a claim. So this was a small broker. And you can go to the next slide, Sandra. But this is a small broker operating out of KZN. They work in the auto manufacturing space. And I've given them the name If Only Insurance Brokers, trading as it will never happen to us, right? We all think this is never going to happen to us as brokers. So If Only trades as a short-term insurance broker in KZN. Okay, the relationship with this client and the broker has been for many, many years. They've known each other personally for 8 years. This particular If Only insurance brokers, we'll call them, they have a turnover of about 12 million Rand, about 6 employees, and this is according to their proposal form, 60-40% split between commercial insurance and personal lines. Okay, so that was what was disclosed on the proposal form to us. This particular client, we'll call them We Sell Things, had over the years disclosed to the broker, and when we talk about the broker, we talk about Mr. X. Mr. X is actually the founder, owner of the brokerage. That's just our lights going off.
Yeah.
Sorry, we need to move a bit, it'll come back on. So Mr. X owns the brokerage. He has 30-something years of experience and by a long stretch is regarded as a seasoned insurance broker, okay? So he's got this relationship with the client, knows the client very, very well, often meets for lunch, etc., etc. For a long time, Mr. X was well aware that this particular client, We Sell Things, was very heavily reliant on a particular service provider for the product that We Sell Things make, okay? And they had discussed the business interruption limit many, many times.
It's quite an exclusive relationship.
Yeah, so it's quite an exclusive relationship, as I say, very cozy. You know, they meet for lunch often. It's a long-term relationship. Over the telephone, and this is 2021, 2022 period of insurance, okay? Leading up to the renewal, the client telephonically requests that their BI limit be increased from 10 million to 50 million. Mr. X says not a problem. He phones the existing insurer. This is an April renewal, so they're just before renewal, 2021, 2022. He phones the existing insurer and he says, please, will you increase the limit? The insurer says, look, unfortunately, we can't. We don't have capacity to increase that limit. You're going to have to go somewhere else. Mr. X says, not a problem. He'll go to an alternative insurer. He goes to alternative insurer B, call them insurer B, and he asks the insurer if they can write the 50 million. The insurer says they can. So what Mr. X does is he sends the expiring schedule, which shows 10 million Rand. And it is not 100% clear in the policy documentation or in the instructions to insurer B that they should actually go on risk for 50 million, right? So he sends the expiry schedule, and in an email, he says the client wants 50 million. Insurer B agrees Insurer B then issues incorrectly the BI policy schedule for 10 million. Okay, this is 2021, 2022. No one picks up on this error. That is including the client and including the broker.
And I think critically, the insurer himself believed they're only on for 10 million, and the 50 million and the 50% reliance was just information.
Correct. So now we fast forward to a year later, and we're getting ready for 2022, 2023 year of insurance. It's coming up. And the broker realizes when he looks at the schedule that the BI limit is only at 10 million. Okay. So he phones Insurer B and he says, look, you guys have made this error. It has to be 50 million. I was very clear in all my correspondence. Insurer B says, well, actually you weren't, but it doesn't matter. We can agree the 50 million, but it's subject to additional information being provided. Okay, so the broker, Mr. X, he goes back to his client and he says, look, I need some additional information from you in order to get this limit to 50 million. Of course, as Murphy would have it, April renewal comes and goes, and 11 days later, the KZN floods happen, and the service provider, we call them, we make things, okay, for want of a better word, they are completely gutted, right? Their factory is completely gutted, which means the client, we sell things, well, they can't trade because they are wholly reliant on this particular component. The client phones the broker, Mr. X, and he says, look, we've got a problem. Obviously, we're going to have to submit a BI claim. And by all intents and purposes, from what we can see, it's going to be around a 40 million rand claim. Of course, Mr. X has a bit of a panic attack. He realizes that they haven't provided the additional information. He goes back to Insurer B and he says, look, you've got to increase the limit to 50 million. And Insurer B says, absolutely not. Right, we stand by the 10 million limit. The initial information in 2021, 2022 was information only. Yes, you sent us a schedule, but your instructions to us were very, very unclear and grey, and therefore we're sticking to the 10 million. He tries, absolutely, if only tries in vain, to increase the limit. At that stage, he hadn't told the client, right? But eventually he realizes he's going to have to tell the client, this guy that he's had this relationship for many, many years. Once we sell things as advised by If Only, the message from the client is very clear. Suddenly he's not so friendly, sort it out, or we're going to sue you. Okay, so that is the facts of what happened. What we could see from the professional indemnity insurance schedule for If Only is that they inset their cover on 1 October every year. So the policy ran from 1 October 2022 to 1 October 2023. So that was really good. They had a policy of insurance in place. The retroactive date was the 1st of October 2008. So we didn't have a problem with the retro because the actual loss when it happened, so the error, okay, happened well within the retroactive date. So we didn't have an issue with that. The deductible under this policy was 1 million rand each and every claim, okay, which we didn't have an issue with. But the one issue we definitely had was the limit of indemnity. So the limit was 20 million rand each claim and in the annual aggregate, meaning 20 million for the year. And here we were facing a possible 40 million rand claim. Okay, so that was sort of the starting point. You can go to the next slide, Sandra. So of course the broker panicked, and the next one, the broker panicked. He phoned us and he said, look, I don't know what to do. And we said, not a problem, we're going to help you. So the first thing we said is we need to look to what the policy requirements are around notification of the claim. We took his policy at the time, and this is very important. Remember, this is a claims-made policy. So what that means is the policy in force at the time the claim is made is the policy that responds. Okay, so in this instance, it was the 2022-2023 policy that applied. We went straight to the policy requirements, and in particular, and this is the leopard wording that we are talking about. Of course, their insurers will have different wordings, but in this particular one, the wording or clause 49 said as follows, and this is really important to take note. It said you, being the insured, have to comply. So this is a suspensive condition. If you don't comply with the following, then in the sole discretion of the insurer, it may result in no indemnity being afforded to you. This is very important. You have to comply. Insofar as notification, you have to notify the underwriting manager, and I've underlined the words as soon as. And this is important because you never want a late notification claim. If you look at the ordinary grammatical meaning of as soon as, and you can Google it, it simply means immediately or as it happens, right? So we never want to wait for a late notification because Stevie will agree with me, that is the one area for a broker, it is really difficult to get around late notification. Yes, we have to prove no prejudice to you guys, but it's the one area that we struggle with.
Yeah, so in this particular case, there's not a problem. But we do have situations where, especially around a circumstance, there are other words in the policy that talks about notifying a circumstance that you ought reasonably to conclude would result in a claim. Now, those are key words, but it's really important that in simple plain language, notify pretty much anything that you have a doubt about at all, notify it, because this is a problem space, a circumstance.
Yeah, and I think that's important. You know, you've touched on circumstance. So in this instance, we were aware that there was a circumstance that ought reasonably or could reasonably give rise to a claim down the line. We knew the client was very unhappy. The client's message was clear: sort it out or I'm going to sue you. Okay. So we immediately, as soon as we notified the circumstance. Alternatively, of course, if you receive the claim. Now, again, going back to Leopard's wording, that definition of claim is really, really wide. It simply says a claim from a third party seeking to hold you liable. All right. We've seen some wordings that hone in on the word claim. You have to receive a summons or a letter of demand, and it has to be for monetary damages, etc., etc. The definition of claim was very, very wide in this instance, so we were fine.
Terry, may I just highlight one other thing? It does talk about you must notify the underwriting manager. Simultaneously, we do not accept business from to deal with broker PI from yourself. You have to go through another broker, and that tends to be Marsh. So the you is not Marsh, but Marsh will have that professional obligation to notify to us as soon as you tell them. So that is how you comply with that.
Yeah. So the next thing that the policy requires is that you must not admit any liability for a claim unless the insurer agrees in writing that you may do so. In this particular instance, you can imagine the broker was really, really flustered. He knew he only had 20 million in cover. He was facing a possible 40 million rand claim. He's got this long-standing relationship with the client, and he kept saying, but I just need to tell the client, we're going to sort this out. We're going to sort this out. You know, and we had to say to him, you cannot say that to your client. Irrespective that the client is threatening to sue, irrespective that the client's threatening to walk away from the business, you cannot admit liability. What you must simply do is say, I'm really sorry this has happened. We're going to notify this to our insurers via our brokers, and we will be in touch. And that's all that you can say.
So I was a broker, believe it or not, for about 300 years. This is a problem space because you do have a commercial interest in maintaining that relationship with your customer. But do not be confused between that commercial relationship and your liability. And it can happen that you potentially do not have a liability. We will end up defending you against that liability, and it has the potential of breaking that relationship. That's why I say do not confuse those two relationships.
Exactly.
If you do, there's a prospect of admitting to a liability unbeknowingly.
Yeah. And I think to add to that, you know, we kept saying to the broker, we understand where you're coming from, but the fact of the matter is that although you and the client didn't pick it up, there might be some contributory negligence from the client because they have an obligation to check their policy documents too. And there also might be some contributory negligence from the insurer who incorrectly issued the policy schedule at 10 million.
Yeah.
So, you know, it was important to put aside the commercial relationship and the personal relationship and simply say, I'm not allowed to admit liability under this policy, but I have referred it to my insurers. Okay. And at some point, we even said, if you're uncomfortable with speaking to the client, we as Marsh, as your broker, as your representative, are very happy to take over those discussions and deal with the client directly. Okay.
I can't remember what the next slide is. Can I comment now?
Yeah.
From a Leopard point of view, our underlying philosophy is that we need to try to find a way to help you as the insured, as the PI, in terms of the PI coverage, and we find a way to admit the claim. We don't go about it on the basis that we try to reject a claim, or find a reason not to accept the claim.
Okay.
It is quite an important cultural issue when it comes to claims management.
Sandra, if we can just go back one, just before we get to this one, I think the last point is absolutely critical, and that is around assistance and disclosure. It talks about you giving all reasonable assistance at your own cost and fully and truthfully disclose information to the insurer and their representatives in relation to any notified claim or circumstance. Now, I highlight the word at your own cost because in this particular instance, when we started delving into the files and the correspondence, it became pretty clear that notwithstanding this broker had 30 years of experience and no doubt knew everything about insurance, when it came to practice management, not so great, okay? And so when we were looking for files and we were looking for correspondence, it wasn't there, all right? Not to the extent that we would expect to see it. And so sometimes if your policy management software or your system is not very robust, it's going to cost you money to actually find the documentation that the insurers are looking for. All right. So I just wanted to make that point. And the second point being, you've got to give reasonable assistance. There's very often when the insurer becomes involved, and we saw this in this claim, is initially the broker was very defensive because Steve will explain that, he did appoint a loss adjuster, and he did appoint legal counsel. And so the broker was understandably quite protective about his business, protective around the documentation he wanted to share. And again, we came back to clause 49 of the policy and we said, we're going to have some difficult conversations with you, particularly around the fact that some of the T's and C's are under scrutiny, but you've got to give us your assistance. We've got to work together. It's a tripartite arrangement here, or tripartite relationship between ourselves, the client, and the insurer. It took a while, but eventually I think, the client realized that we were there to assist. You're going to have some difficult conversations with the insurer. I think what's important is that, he eventually came around. I mean, we're brokers just like him. So I think there was also this element of, oh, but Marsh are our competitors. We don't want to be seen to be doing anything wrong in front of Marsh. That wasn't the issue. We are there to help. So immediately we sort of got the buy-in from the broker. I think as that happened, things started running a lot more smoothly. So I think, Sandra, if you go to the next slide, what we then did as Marsh, once we'd gathered all of this information, and I think this is important for the insurer, is the first thing we did is we drafted a claims notification for Leopard. So we notified the circumstance. That's absolutely fine. Okay. But then we took a little bit of time before we embellished on that. And then what we did is we drafted quite a verbose or detailed notification. And what we included in that notification is obviously the nature of the loss. So we were quite clear that this was a professional liability claim. We were specific about how the claim and the circumstances arose. So it read like quite a good story for you guys. You didn't have to scrounge around for information. We were quite factual in this is the timeline, this is what happened. We gave a lot of details around how the loss happened. We were very open about the fact that simply it was an error on the part of the broker because they missed the schedule, okay, the 10 million rand schedule. We also detailed how the insured first became aware of the matter, and that was really important for the retroactive consideration. So we ticked that box.
And
notification. We also included details about who committed the error or the omission. Now, sometimes, at the time it happens, you may not know if it's a particular employee, particularly if it's fraud, as an example. But we were quite clear around the fact that this was Mr. X, it was his client, it was his responsibility. We weren't hiding the fact about who had committed the error. And the reason we did that is because we said, look, Mr. X is the broker of record in this particular instance. Equally important is he had authority to act on behalf of this client. And that's very important because we ticked that box around having authority to act. And we also made the point that Mr. X was therefore covered as an employee or under the policy insofar as the errors and omissions were concerned.
Yeah, so this was very important because I now reference what Terry said at the beginning, the potential of rejecting his claim entirely. Now, the point about that is that at face value, without the detail and the support of Marsh helping you get in, or the broker in this case, getting information to us and ourselves working with Marsh to work out who did what, it looked at face value that the broker was so reckless in his communication with the insurer. Pretty much, he did a fairly basic needs analysis, but there was zero in terms of record of advice, which, as you should know, is a regulatory thing, comes straight from FAs. Now, there are markets out there that will just simply reject the claim instantly. We were pretty close, not because of those things, but rather that this was almost a deliberate, reckless, bordering on close to fraud. And that's the problem.
Yeah. Well, we debated
persuaded.
This, right?
We had a long debate
about this.
But Terry's a bit smaller than me, but she hits me hard. And we were persuaded with the detail that Marsh was able to provide and what we got from the insured themselves. We went to that file. We looked at the files. And I've got to tell you, it was not good. The record keeping, and you'll see it later, record keeping was disastrous. The insurer of record was able to say, I'm only in for the 10 million. I was never put on risk for 50 million. But the insurer incidentally turned to the broker and said, if I, as the insurer, am on the hook for 50 because of your act, Mr. Broker, I'm going to claim against you, Mr. Broker.
Yeah, there was also that element. We were quite worried at some stage that the insurer was going to have a go at the broker.
We had to let that go. We even tried to go back to the insurer record and rectify their policy, which is a legal process, unsuccessfully.
So I think the other thing that we included in the notification were the details around the quantum. We made it very clear at the time that this was an estimate, okay, and that we knew that we were going to have to do quite a bit of work to get to the actual BI number. Now, Marsh, we have our FACS, forensic and accounting team, this is what they specialize in. We offered this service to the client. Sometimes it's covered as part of the claims preparation costs, but these are forensic accountants, they're actuaries, they assist in calculating BI. The client, with Steve's input, we decided not to use FACS, and we'll get to that because you appointed an external loss adjuster. But the issue is that we were quite clear that this was an estimate, and there's nothing wrong with giving an estimate, but don't say, I don't know what the quantum is, because, Leopard have to put reserves aside, those reserves and the quantum, that will dictate whether they appoint counsel, and we'll get to that. The other thing to include is details of any third-party service providers that you may have appointed. So the knee-jerk reaction is, look, I'm going to get my own lawyer involved in this, and you're perfectly entitled to do that, okay? But we must advise the insurer of that. And I think in this instance, we hadn't yet, so the client hadn't yet appointed their own lawyers. We had told the client maybe have them on standby, but we know we've worked with Leopard for many years on claims. To Steve's earlier point, it was really a case of let's get the best legal counsel to defend this broker. And so there wasn't a need in this instance for the broker to appoint counsel. But sometimes when there's a conflict, maybe there's some policy interpretation issues, then we would assist that client in getting consent for them to appoint their own counsel.
So on that point, our preferred position is not to appoint your own counsel. The reason for that is that it has potential conflict. When we appoint counsel and legal advisors, we pay for that from Rand 1 up, and that is part of, I suppose you could use the word control, but we think we're better off, and we know how these people work, and they represent both parties, yourselves and us. So once we've collected the detail, the claims in, we understand that there is a legal process going to happen, we would tend to go externally for that legal support, especially if litigation is going to be involved. We do quite a lot of this stuff internally with the legal team. We employ a legal team, so we do try to do a lot of that ourselves. And in this particular case, we did need to get some clarification about quantum.
Yeah.
The reputation of the insured and the survival of the broker here because of the limit of indemnity was critical.
Yeah.
And we needed to support and make sure they didn't go out of business because the limit of indemnity was too low.
Yeah. The other thing important is to detail any mitigatory steps that you've taken. So, of course, never admit liability, but at the same time, the natural thing to do is to take some steps to mitigate. Okay, include that in the notification. It shows the insurer that you're taking steps to mitigate the exposure, even if it is a circumstance. So we included that as well. And then including any details of other insurances that may respond. So sometimes it could be a general liability policy that could be notified. Maybe it's the D&O policy, whatever the case is, depending on the facts and circumstance. But detail that. All right. The other important thing is around the support documentation. So the broker was initially quite reluctant to give all the information. We absolutely took the point around privilege, particularly if it's going to be in contemplation of litigation. And we said to the broker, if you're feeling uncomfortable about that, by all means, get advice. We, as Marsh, can't give you legal advice, but take legal advice if you're worried about privilege. And that's important because, you know, there is a fine line between handing over the support documentation, but also it could attract privilege. And so if you need to take advice about that, absolutely, you're fully entitled to do that. The other thing we did is we attached the existing policy schedule, so the PI policy, and we were very clear about which specific insuring clauses we were claiming against. So, you know, we've seen notifications come in that say, look, we've had a loss, there's been an error, this is it, we're claiming under the PI policy. And literally that's what the insurer gets. All that's going to do is it's going to delay the insurer in getting admission of liability or getting admission of least policy response. So we're quite clear. We make sure to attach the policy schedule as well as refer to the specific clauses that we're going to be saying or considering. So it's simply read, we will be looking to the insurer to cover this claim under XYZ clause. Okay, and that made it very clear for you guys. You were able to hone in on it. And the other thing that we would normally advise is that we attach the TOE that you have with your client. So the reason that we say attach your terms of engagement with the client is because we know that the client equally has a responsibility to review policy documents, and we kind of thought there might be some contributory negligence as well. The TOE also shows the insurer that you've taken mitigatory steps, particularly if there's things like a limitation of liability as an example. So that's really important. So all of these things were encapsulated in a detailed notification. Just made it a lot easier for Leopard to be able to hone in on what they were asked to consider. They had as much supporting documentation as we could provide. It didn't take too long for them to come back to us with additional requests, which is obviously the natural thing that happens. But I just remember the comment being made that the notification was really wide enough for them to hone in on what they were going to consider, as opposed to the back and forth that sometimes we've seen in other claims.
Just broadly on this is that when you do have a claim or potential for circumstance, certainly working with Marsh, we do prefer to sit with you. I mean, the old face-to-face and understand is quite a key element these days.
Yeah. Good. So Sandra, maybe we can then go into the next couple of, or the next slide, and we'll stay on this for a while. So I think, Steve, you know, from your perspective, right, so you received our notification. I know that we had a couple of chats about it. We had some good interaction around it. What was your immediate consideration to provide consent to incur the cost? So what triggered the fact, that you said, all right, we're going to have a look at this claim?
Yeah, so in this particular case, we understood there were issues in terms of the communication with the insurers of record, that we thought that the insurer of record should actually be admitting the claim for 50 million rand, 40 million rand, the full amount. And we then started to unpack some of those issues. We realized that there was a very upset end customer who was going to take action. And I think we fairly soon realized that relationship was breaking down. So we needed to go out and get proper legal counsel to make sure that we understood how to approach the insurer of record for rectification on the one side, and the other side is what happens if a summons does come. Do we really need that, or should we be entertaining and engaging a conversation about potential settlement, noting that the insured's level of cover was inadequate?
Yeah.
How do we protect that? So our consent was the consent was not required in terms of giving it to the insured, the PI, the covered entity. We held on to that. And as I said before, the policy does provide cover from ground up. You don't have to spend that money. And we do. We want to protect your reputation. So that was probably a fairly simple decision. External counsel appointed. We didn't have to go so far as going to senior counsel. We employed a firm of attorneys, and they give us. We tend to use the same people each time because they know how we work. They know our culture relating to claims. And it is, although they may be more expensive per hour, they're a lot cheaper because they know what they're doing. That's quite a key point.
Yeah, and I think that's important because when you came to us and said, look, we're going to appoint XYZ attorneys, we as Marsh know them as well.
Yeah.
We know them, we engage with them regularly. So we were comfortable to then go back to the clients and say, look, these are top-notch lawyers. They know what they're doing. We're comfortable. I think if Steve had come to us and said, look, we're going to appoint, a firm of attorneys that we'd never heard of, I don't know, we would have said absolutely not. So I think that's important as well, is you as the client need to be very comfortable if Leopard appoint lawyers that you are comfortable with those attorneys. Because, there is sometimes the argument around conflict. Well, who are the lawyers acting for? Are they acting for the insurer, or are they acting for the broker? We know that they're acting for both, but there is always room for that conflict. Also importantly is that we knew that firm of attorneys, if there was ever that issue around conflict, we would be able to have that discussion with them. So we will raise the issue of conflict. And the reason we do that is because we hold your hand all the way through. My CEO, Spiro Futuros, always says claims this is when we're there in the moments that matter, right? As brokers. And this is for this particular client, we were really there in the moments that matter. So we were able to hold their hand all the way through this claim. And I remember clearly saying to the client, look, if there is a conflict at any stage with this lawyer, we'll raise it. Okay, so that's, I think, really important, is not just appointing counsel, but who you appoint.
There is sometimes a balance here, because if the level of cover that you've got is small in relation to the total claim. Let's pretend for a moment the cover was only 5 million rand. We conclude that there's going to be a liability, but the claim against the insured is 40 million rand. That the weighting of things changes, because actually the real loss is sitting with the insured. We would tend to quite rapidly help with the 5 million if we think there's a liability, and the balance would be the issue, the problem for the insured. But broadly speaking, it's almost exclusively the case that we will hold on. We won't let people appoint their own people. It doesn't mean you're not entitled to. You can still do so, but that would be at your own cost.
Right. Okay, I see Sandra's saying she wants 10 minutes for Q&A, so I'll move along.
Okay.
I think, Steve, we debated the loss adjuster, right? We knew this was a BI claim. Quantifying that BI is always that's why we've got experts at Marsh that do that. Just take us through your decision to appoint a loss adjuster.
So two things happened here. That we realized there was a 40 million rand claim. We became aware of the fact that the insurer of record had their own assessment of value, and they felt it was closer to 19 million rand. So we thought we better, that they wouldn't share that with us, by the way.
Yep.
So we had to get a loss adjuster, and we don't use any old loss adjuster. They tend to be specialists. They know what the liability is about, but there needed to be a factual find and an assessment of the value of the claim, especially in relation to BI claims, because there's going to be a debate, always a debate. And we were successful in getting somebody to reconfirm that the value of the claim was closer to 17 million rand or thereabouts.
Yep. Okay, so let's discuss, I think importantly, before we get to subrogation, but let's discuss, we picked up straight away, and I think we were open with you from the start, that, the terms and conditions in the policy, particularly around the minimum risk management requirements, and that is, we're talking about the record of advice, the way that the instructions were, we knew we were a little bit on shaky ground. Okay, it wasn't what it was supposed to be. Remember, and we cannot emphasize this enough, is around the phase disclosure notice. There was a phase disclosure notice. It was very, very old. There was a record of advice, but it was very, very old. It certainly predated the 2021-2022 renewal. So there was no record of the actual renewals for the past 2 years. And you'll recall I said it was done over the phone virtually, a couple of emails. At one stage you came to us and said, listen,
so bad.
This is really bad, right? We don't think we're going to pay this claim. We said we didn't think that there was prejudice to you. We raised a number of other issues. Just take us through the decision as to how you came to that decision. Well, okay. Bearing in mind, very importantly, that the policy says that in the event that you don't have the minimum risk management requirement, your deductible doubles. Now, we were upfront with the client from the start. We said, we think you're going to be in for a 2 million rand deductible here. By anybody's admission, you could see that the policy, that the risk management requirements were not really there. And so we were upfront. But take us through what changed your mind.
I think,
besides me harassing you.
Besides you harassing me. I think the important thing, if we just step back for a moment, there is phase and it exists. And we are increasingly finding that the lack of really proper needs analysis and a proper record of advice is becoming a big problem. First of all, you're in a breach of phase, which is legislation. The policy at the moment doesn't say we will not cover it. We simply say there's going to be a double deductible. And when we finally went into the detail of the claim, it was going to be the factual thing was the needs analysis was kind of there. We accepted that. There was no question. There was complete lack of any record of advice done properly. But we ended up accepting that, saying, okay, now the deductible does apply. These terms are now finding their way into PI policies, as you would find in big property placements and other liability placements, all in the P&C space. The risk management component, when you're advising your customers, becoming increasingly important. And equally for you buying your own PI cover, it is equally important, especially, just to sidetrack a little bit, especially in the context of fraud and money disappearing and sending money wrong directions.
Yeah, absolutely.
So that was quite an easy.
Yeah, and I think the other thing we argued quite strongly is you'd had this policy, the retro was 2008,
yes,
I think it is. So you'd had it for many, many years. There was a relationship, and I remember saying to you, this is all about relationships, right? You've known this broker for many, many years. This is the
personally as well.
There you go. This is in the moments that matter, and I think that also helped. There are some insurers that when the claim is big enough, obviously, the relationships mean nothing. But in this particular instance, I think that was also one of the factors that helped get us through. So ultimately, the good news around this is that we did manage to settle the claim. We agreed with what the loss adjuster's assessment was. And so, just remind me how much legal costs cost you in this one?
It's about 800,000 rand.
Okay, all right, which is not bad, actually, if you think about it. Remember the
We did a lot of
800,000.
work ourselves as well. So,
Right.
so and I
Yeah.
myself and the senior legal people internally got directly involved. So that saved us money, remembering that money we spend does park against the indemnity limit.
Correct.
The deductible doesn't apply to it, but it does go against the indemnity limit. So we've got to be very conscious, especially when limits of indemnities are too low, that we work carefully with those funds.
Yeah, but in this instance, we knew that there was a liability,
Yeah.
right?
Yeah,
we just knew there was a liability pretty early on. So what we did is we applied the deductible of 2 million. I think the claim was 18 million, including in the end, including the legal costs. Okay, and so you guys paid out 16 million. Less than 16 million.
That's correct.
18 less 2 million on the
and the 10 million from the insurer of record.
Of course, yes, of course. So the insurer of record did pay the 10 million.
We still had another 16 on top of that. So the ultimate end claim was about 27 million rand.
So that was good. Just before we go onto the AOL, we are going to run out of time, but just around subrogation. I mean, when do you guys decide to subrogate against? Because in this instance, the insurer had made an error. There was no question about that, even though they argued that they didn't. But when do you subrogate?
Okay, in the case of the insurer, it was about rectification, but we couldn't demonstrate to them that they had a increased responsibility.
Okay.
Subrogation is sitting in the policy that says if someone else causes you to be liable, we'll take action against them. That would include an employee in the event of fraud, or a third party that defrauds you and causes you a liability, or where you rely on somebody to provide professional advice on which you rely, then subrogation would apply.
Perfect. All right, so let's just touch on this final slide, which is really just around the AOL and the rejection. Just to remind everyone that when you Sandra, you can go to the next slide. The agreement of loss, just remember, important when you get that agreement of loss, just check for accuracy, because once you've signed that AOL, that's it, right? It's in full and final settlement. This is the settlement. This is the basis on which the claim is going to be settled. So just check it for accuracy. We've had examples where AOLs have been signed, the wrong limit has been stated, the wrong dates have been stated, wrong facts, etc. The second thing is check that it contains the full and final settlement clause. That's important not only for the insurer, but also for you, so that there's no subrogation, there's no right of recourse against you as the broker. Check the Section 88 VAT. So if the limit of indemnity includes VAT or excludes VAT, just make sure that Section 88 VAT is dealt with properly in the AOL. I know in that particular AOL, it specifically said, this is the limit, this is what we're paying, plus the Section 88 VAT. It was very clear.
Yeah, just practically what tends to happen is that the liability that you incur, that value is settled directly with that claimant, and the Section 88, assuming you're a VAT vendor, is paid to you.
Correct.
There are some brokers out there get a little confused about us paying them 88, thinking it's a revenue stream. It is not.
No.
You have to pay it to receive it.
Correct. The other thing is look for that dual confidentiality clause. So it's important from a reputational protection management is that you don't want anybody disclosing that claim, right? This broker was quite pedantic about that. He has a reputation in the market. He certainly didn't want this to get out in the market. We think this is a big market. It's really not. Word gets around, so-and-so's had a PI claim, and suddenly from a reputational and even from a financial perspective. So have that clause. And then if the insurer is required to use any personal information, sometimes for their own record keeping, for their reinsurance treaties, negotiations, etc., then make sure that there's a POPI clause that covers that. Okay, so that's the agreement of loss. And then finally, obviously, if there's a dispute, and we had some discussions around this, with the client, and we said, look, at some stage, when Steve didn't want to pay the claim, we said, if there's a dispute between you and Leopard, you are protected. This comes straight out of the policy wording. You've just got to notify complaints at Leopard. Is Parktown still the right address, by the way? It may have changed because this is an older wording, but yeah, you want to serve a summons. That was the summons. Yeah, I think that was just old at the time. And then, of course, don't forget that you've got rights of recourse as well to your broker, particularly via the phase onboard. So if there's an event of a dispute, you do have right of recourse. Sandra, I'm going to stop there, which will give us then 10 minutes.
Well, let's leave the last.
Oh, right. Lessons learned. Okay, so I think just
leave that up as a conversation.
Yeah. Okay, so maybe just go to the next slide, which is the last one. Yeah, so I think around the lessons learned, I think, Steve, you've touched on, the phase compliance. I mean, they are suspensive conditions of the policy. We almost never had this claim paid because the phase compliance wasn't there. So please just, revisit it, make sure it's there. The filing protocol was essential because if your filing protocol is good, you will have ease of access. This broker took, I don't know, weeks for us to get access. It was saved in all the wrong places. So that's absolutely critical.
It is critical, this, because the better your file is, you need to put everybody on filing duty and how to file things. Go to a librarian if necessary. But a file needs to be in good order and in the chronological order of nothing else. But when you have a mismatch of all sorts of things, it's impossible, and the legalese becomes huge.
So I think the other one was, experience means nothing, right? This guy had 30 years of experience. It meant absolutely nothing when the risk management was ignored. We've stressed it about the collaboration and cooperation with the insurer. Steve has said it, they are there to help. We are there to help. We may be competitors in business, but as your PI broker, we are there to assist you and hold your hand. So please cooperate.
Yeah.
We spoke about the reputational harm. The limitation of liability is so critical. In this instance, there was no limitation of liability. If there was,
there wasn't proper terms of
there wasn't. But as an example, we have a limitation of liability at Marsh, and we do that to protect our business. And there's nothing wrong with doing that, right? So if there was a limitation of liability here to a specific amount, which the client had accepted, well, then your claim would have been a lot less.
I would like to highlight this. I mean, I know I've been going on this for 3 years now online, and I know the FIA is trying to do something as well. But if you have no other takeaway from today, other than entering into proper agreements with your customers about what you're going to be doing, what services you're providing, and more importantly, what services you're not going to be providing, and consider limitations of liability. You cannot be liable these days as a broker for absolutely everything. And increasingly, brokers are in a place where they are being blamed for everything. You cannot afford it. You cannot be paid enough to accept all that liability.
Agreed.
You've got to get professional, enter into agreements with limitations.
And then I think the last point I'd make before questions is just, a large claim may well result in either a non-renewal or a punitive renewal. So again, we had a lot of discussions around the renewal of this client. We knew in October it was coming up, October of 2023. We did manage to get the renewal over the line, but the client was penalized, make no mistake. I think their premium went up 30%. So again, just if the risk management had been there, who knows, maybe they wouldn't have had such a punitive renewal. So just remember that. And finally, share the claims experience with your team, because this is a training and it's a learning and a development. It's a learning curve. Sometimes I know that broker didn't want to share anything with any of the employees, and we encouraged him to actually share it so they could learn the lessons. So I'm going to stop there.
Yeah, I think
Sandra,
we could talk forever here.
We could, but we know that you wanted some time to chat.
Okay, thank you.
That was great. Thank you so much. Loads of information to take in there. And we do have 1 or 2 questions, but I'm going to also see where Barry is. I thought I saw him there for a second. Here we go. And I'm sure Barry has 1 or 2 comments or nuggets of wisdom as well from his side with regard to what you shared. So Barry, I'll ask you first maybe a couple of words and then we'll touch on 1 or 2 of the questions.
Yeah, thanks, Sandra. Just in listening to Terry and Steve, I'd made a couple of points, and then I think that final slide almost became a checklist for me. And then just highlighting that under the header of filing protocol, my comments there is, and just looking at the market today, and for some of us who have been around a while, business in the market is no longer transacted on the old PALS Act. Or you're doing business in a restaurant or whatever. It's far too serious, and that pays. There's nothing will come of that if you've not paid particular attention to the detail. And I use the expression, in fact, in terms of risk management and risk mitigation, to apply a risk management philosophy as to how you risk manage your client. And that talks about the whole client interaction, that you pay attention to the detail. You don't forget that there should be an annual review, and that annual review needs to be comprehensive because businesses change, circumstances change, policy wordings change. If we just have a look at the current set of, in particular, commercial property policy wordings, this thing called subjectivities. In some instances on global placings, you can have subjectivities up to about 20 pages. So, and it comes to Steve's point that the broker can't be expected to understand and know all of those. But if you are not aware of that, and it might just be an innocuous looking little clause that's been put in onto the policy or a subject to, that'll only come out when you have a 40 million claim. So I think brokers have to pay particular attention to that. On that score, we're talking to the insurers, the FIA and the regulator, that what we're looking for in terms of trying to protect the broker and the advice they're giving is contract certainty, which at the moment on large placings, it's the definition of is contract uncertainty. So in the interim, please pay attention, a lot of attention to that detail and how you risk manage your client's portfolio. The issue Steve touched on and Terry touched on the issue of the limitation of liability. And maybe, Terry, at a point in time, not necessarily today, one's got to give some guidelines. And first of all, I know it's difficult, but I know Marsh has been working on it for a few years now, is how do we determine what that limit should be? So here we have a 20 million limit, but we've got a 40 million claim. So 20 million, would my word, it's also a cost issue. But what concerns me is those brokers who only have that minimum limit or that 5 million limit or 10 million limit when they're transacting this type of business. So I think that is there, and maybe some guidance on that. And then how do you determine what your limit of liability should be? I can remember when I was on the other side of the fence to you, Terry, when you were doing that big banks policies, we said, no ways, we're not accepting this limit of liability. But you then convinced us to say, okay, it is equal to. And I think we need guidance on that because for many of our brokers, this is a new concept, but it is so important. And I think Steve has highlighted that. We saw the claim, 40 million, we've got 20 million cover. Where does the other 20 come from if you're liable? Bang goes your business and your livelihood and your assets.
And you save nothing in premium, Barry. Nothing.
Yeah.
Pennies on premium.
Sandra, I think that those are the observations I had. But I think, and thanks to Steve and to Terry, most informative.
Thanks, Barry. Just one, I think you mentioned something really important around the filing, but also around, and something we should have mentioned, is minutes of meetings. Yes. So, these days, it is so easy with AI. I mean, we, for example, at Marsh, we have an AI app that takes the minutes for us, right? So invest in the technology because it is there. Otherwise, just have basic minutes in place. I mean, there were no minutes of any of the meetings, even the telephone calls. The broker said, well, we had a telephone discussion. Well, that means nothing if you haven't followed it up in writing. But again, there is technology available out there today. Invest in the tech, particularly around minutes of meetings. Thanks.
So Terry, I mean, old codgers like Steve and I, we will understand. We didn't have AI. We still don't know what that means. But we were
I
always.
do. You're much older than me.
Oh, well, we'll debate that. One of the very first things we were always taught, that whatever you said or whatever said to you, make a file note and you date it and you sign it or initial it. So even that file note on that piece of paper in your file is so important. Don't forget about that. You don't necessarily have to be going AI.
It's incredibly
A
Good.
bit of old
Sandra,
school there, Barry.
are there any other questions?
Yes, look, I think in the questions there was talking about the limit of liability, which Barry has touched on, and I think there's an opportunity for a session just on its own to provide some guidance and information around that. So thank you for that comment, Ian. I think there was about half an hour ago already. There was a question from Lloyd. Cost involved in proving my claim. Can't that be picked up under CPC? I don't know.
claims
I'm just
preparation
reading
cost.
off
Okay, the
yeah.
LEPOD policy doesn't have a claims preparation cost. It's embedded in the definition of cost and expenses, where we say we'll spend money to mitigate, investigate, employ legal people. But claims preparation cost in the liability space, I know my competitors have that kind of stuff in there, but it's quite difficult to say you're going to spend money to prove whether you're liable. It doesn't actually make sense.
Okay.
In my humble view.
Yeah. So I think the other thing in support of what Steve is saying, Sandra, is that you would probably have a nominal amount, relatively speaking, a 50,000 or 100,000. On this particular case, we're already talking about 800,000.
Yeah.
So I think one's got to rely on the terms of this type of coverage and policy wording to factor that in, and that goes back to ensuring that your limit is sufficient. Million, 5 million, 10 million limit doesn't.
Barry, I never want to be controversial, as you know, but the limits of indemnities bought by brokers is pathetic.
Yeah,
it needs to be a minimum of 5 million. Forget about what the regulators say. The regulator hasn't a clue. 5 million minimum nowadays, guys. You're a small guy. 10 million, 20 million is probably better.
That's one of the few things we agree on, Steve.
Okay, so I can see there are a couple of more questions here, but I think a lot of it would be covered in sort of some of the information that we've shared and
respond to them anyway.
Correct, and one or two maybe just a bit more one-on-one. So I think from this perspective, we will be sharing the recording with all the attendees as well, and this information. But yeah, I just want to say a very, very big thank you, Steve and Terry, for the work that you put in. We really do value the expertise and what you're sharing here today. I think we must continue with these. Find those claims, share it. We'll put these sessions together. Just highlight the need for looking at what is your coverage, what's applicable to your business, and understanding what's available to you when stuff goes wrong.
Yeah, I think, Sandra,
if only,
next time we should do a crime claim. I think we should unpack a crime claim, because the PI is one thing, but a crime claim is quite another, sometimes more juicy. But I think next time maybe we unpack a crime claim.
Amazing. That sounds great. And yeah, to the team, FIA team, Brad and Judy, thank you very much for assisting in the background. And you're welcome to drop questions to myself or Brad. Terry's details we'll share with everybody as well on the PI scheme. We encourage you to reach out, speak to Marsh about the PI cover, contact them, get a quote, understand what your coverage is. And again, thank you so much to Barry and Steve and Terry for your time and preparation for today.
Thank you. Thank you, Stephen.
Go well, everyone. Have a